Welcome to the Australian Property Investment Podcast with your host, Aaron Christie David. Each episode, we ask an expert to share their key insights for aspiring investors to make confident property choices.
G'day everyone, my name's Aaron Christie David and I'm your host of the Australian Property Investment Podcast, where we're all about helping investors on their journey to make better property decisions. And with that, on your journey comes trial, error, making mistakes, but I think most importantly is hearing from other investors as to how they've gone on their journey, building their portfolio, what has worked and maybe what hasn't worked. And I'm thrilled and pumped to have one of our wonderful clients, Lea Gore, join us today. Lea, welcome.
Thank you. Thanks for having me.
No, not at all. Thanks for being here. I know it takes a lot of courage as a client, but also someone just to come and be really open about your journey, right? Everyone wants to have the portfolio already built, but everyone started somewhere.
That's exactly right.
And I think it's important to go on the journey because your journey has been incredible to watch. I mean, we're fortunate that we've been part of your journey, but also to see your maturity and see you develop and see you become far more confident as well. You've been someone, I think, and I'm certainly not blowing your horn here, but you're someone that has a wonderful demeanor. Like things don't affect you too much. I'll touch on one of your settlements later, but I think that's when I look at you, that's one of the hallmarks of your success is that you have a wonderful temperament. And
thank you.
That says a lot about you as a person, probably says a lot about you as an investor as well, that you come to in your own skin, yeah?
Yeah, most definitely. But that's very kind of you to say.
Not at all. Not at all. You've been great. So, Lea, why don't we start there and tell us a little bit about you as a person, only as much as you're comfortable to divulge, but then after that, how about you kind of just take us on a journey saying, look, how did you get your start? And maybe we'll start with your first purchase as well.
Yeah, of course. Well, I'm 36 this year, so I'm mid to late 30s now, and I started
mid-30s.
Mid. Yes, I'd like to stay with mid, but I'm facing the honest truth now, so that's totally fine.
Yeah.
It's all part of life.
Yeah.
And I've currently got two investment properties and my principal place of residence, which I've recently bought by selling what was an investment as well.
Yeah.
So I got started pretty early in the game. I was, I think, 23. Yes. I've been investing for a while and I've always worked in the arts and education space. So I work in live entertainment and events, and I've also coupled that with working in education. So that's a bit about me.
So, Lea, as a young 23-year-old, typically what happens is you're starting out your career, so you don't have a lot in the way of savings or a deposit, and then your earnings aren't that high, so you're probably limited in how much you can borrow and ultimately spend for your first property. So how did you get your start to buy property number one?
Yeah, that's exactly right. I mean, most 23-year-olds aren't buying property. It's not really something that you can afford to do. A lot of the time in your 20s, you're spending money on going out and having drinks and having fun with friends.
Yeah.
So, yeah, and that's exactly the situation that I was in. And I was also working full-time, and I'd been working full-time for almost 12 months. So I had a little bit of money saved because I was still living at home.
Yeah.
And funnily enough, as my life and my story would have it, my sister actually decided that she was going to move home because she came back and announced that she was pregnant and she was going to move back to the family home and have the baby there. And I went, is this something that I really want to stick around for? I thought, I'm in my 20s. I don't want to come home at 3 o'clock in the morning and then wake up a screaming baby and all the rest of it.
Or the other way around, a screaming baby wake you up.
Exactly. Exactly. At any rate, there was going to be a lack of sleep and I was still working full time. And I thought, I don't really want to do that just for my own personal sanity. And also, my sister probably needed a bit of time to get used to being a mother at that point too. So I decided it was time for me to get out of the family home. I looked at a couple of rental places, and to be perfectly honest, they were pretty gross. Luckily, I had a bit of money saved up. I don't think it was quite 20 grand, but it was at least something. And I sort of weighed up the difference in contributing towards rent and being able to afford something. The only way that I actually could make buying a property possible was actually asking my parents to go guarantor for me on my first property. So what I ended up doing was finding a 2-bedroom, 1-bath, 1-car space unit, and that became my first property purchase.
Excellent. Very good. And that's why guarantor loans are there, right? For a reason. They serve a very good purpose to help someone get into the market when you don't have a deposit, but maybe you've got the borrowing capacity to support a guarantor loan, yeah?
Yeah.
Yep. And then no issues, I guess, from family and money and the way the loan worked out for you as well?
Yeah, the loan worked out fine. And the whole reasoning behind getting a 2-bedroom unit was so that I could get a housemate who would also help me pay for my mortgage, because it was a big thing. You know, you're in your 20s and you don't want to have that huge mortgage responsibility necessarily. I mean, I was working full time and that wasn't an issue, but I still wanted to have money to spend on frivolous things as well. And having a housemate just really helped with that financial stability, I guess.
Excellent. So you bought property number one, you've moved in that, for example. Did you do any work on that, or how did you then increase the value in that property, or how did that go for you?
That's a really good question, actually. I bought that in around about the time of the 2009 financial crisis.
Yeah.
So it was sort of at a lower price point, and then just as life would have it, that property naturally gained equity and accumulated in value. So it was a few years later, and living in it and paying that mortgage, I just let it sit there basically and gain equity, and didn't really do anything to it apart from paint it.
Nice. The lowest, I'd say the lowest maintenance investor that I've seen trying to add value to their property, perhaps. But and then what happened after that? At that stage, when did you kind of then consider the option to then buy number two?
I came across a scheme which is called NRAS, which stands for National Rental Affordability, and I had the opportunity to buy an investment property in that scheme. So it was is a 1-bed, 1-bath, 1-car space little unit. And I had enough equity in my first property to be able to purchase that one. So I used basically all the equity, and it was an off the plan as well. Yeah. So I had a bit of time between signing that contract and actually starting to pay the mortgage on that. So, and that's great because I've still got that and it's rented out at a lower than market value. But I do get an incentive from the state government and also tax offsets from the federal government. So
excellent. I mean, off the plan and apartments sometimes get a bad rap, right? Which is they're dime a dozen. There's settlement risk, there's builder risk, for example. But your off the plan purchase is one of those, I guess, the positive stories to come out of it, that you bought a property, but then you had time for between being completed to maybe save some more cash or have your existing property increase in value as well, right?
Yeah, that's exactly right. And I mean, also, I spoke to a few people and got the right advice. I didn't buy into a unit block that was like 10 billion stories high and like hundreds and hundreds of units. It's actually a lower rise unit block. I think it's only got 3 levels. Oh, nice. And it's right down the road from a shopping centre and right across the road from a school. So I sort of looked at the area and looked at the statistics, and I guess you've got to do your homework with any investment, really. Very
good. And then settled on that property, and then you've also then gone to buy another investment property in the background as well, right?
Yeah. So I think that first investment property, it was about 2013, 2014.
Yeah.
In 2015, I decided to move out of my first property and I started, I guess, what's referred to as rentvesting. So move out of my principal place of residence and then just start renting in areas where I couldn't necessarily afford to buy and rent instead. Yeah. But that sort of gave me a bit more cash flow as well to buy another investment property whilst my 2, then rentals were still accumulating in value, which I know is a bit of a weird way to do it, but I wanted to move to a sort of a quieter area, more leafy and green. And in the area that I was looking in on the upper North Shore of Sydney, I couldn't afford to live up there by purchasing, so I had to rent.
That's where Rentvesting has its place. It has a place in your life, and it has a place as part of your growth plan, right? Which was, hey, look, I can still have a good lifestyle, so rent where I like to enjoy to live, but then still have properties that are sitting in the background, which tenants are now paying the mortgages on, but also they're increasing in value as well, isn't it? And that's an option that served you very well, because it helped you then springboard and buy your third property, which that's where our paths crossed. And
yes,
and look, it was a very tight. I think we could cast our mind back, right? A very tight settlement by the time you and I met and had a chat as well. But even then, I say to a lot of people, if you want to talk about tight settlements, I think we did that in about a week and a half, right? That settlement. Yeah.
That investment property, which is in the southwest of Sydney, that was probably one of the most stressful periods of my life.
And you say that with a smile, because you were smiling throughout the whole time as well. So I don't think you say it's
trying.
stressful, but you were the most politely stressed out person that I'd met. But yeah, I mean, that was, again, a new property. I mean, there was plenty of changes going on in lending from, if I cast my mind back as well. So you probably got caught in the crossfires of bank policies changing, but it didn't stop you, or it didn't stop us to go, hey, look, we need to find a solution, and we all end up settling on your purchase. And that's gone on to do some incredible heavy lifting as well in your portfolio, hasn't it?
Well, that's exactly right. I mean, I've been told that the investment properties which cause you the most amount of pain are actually going to perform the best out of all of them, which is fantastic. But at the time, oh my goodness, I guess I'll give a bit of context to what actually happened. So this Southwest Sydney house, again, bought off the plan because it is a brand new suburb, which is fantastic. So it's seen so much growth. But you're right. The problem was that because there were so many changes taking place, and across the road from where this property was being built were these big power lines. Yeah. And I think I went to you, Aaron, and said, look, I need help because this bank says that the power lines are too close. However, where the house I was building was exactly the same distance as all the other houses in the street across from those power lines. So how
is everyone else getting funded and their loan settling and approved?
Exactly. Exactly. And it just caused so much stress. And I think you tried with multiple banks until we finally got that through. And you're right, within I think it was less than a week before it needed to be completed, because the builder was going, when are you going to pay us?
Yeah, correct. The builder was breathing down your back. But
exactly.
And I think that's what happens, right? Sometimes your back's against the wall. You ask, we'll find a solution, and look where it is. And that's why I'm like, our role, responsibility as any mortgage broker should be is get the job done and don't ever pass up great opportunities, not only because you would have lost your deposit, but also if you hadn't had the gusto to complete that transaction, then you would have missed out on all that extra growth that's come off the back of it as well.
Exactly.
And so a little bit of short-term pain has led to some really wonderful gains off the back of that.
Exactly. I think that property was completed towards the later end of 2018 and it's 2021 now, and it's more than doubled in value. So, that just stands to reason.
This is it.
You got to stick with it, unfortunately.
And then you mentioned that you've sold one of your investment properties, but then you've gone on to buy your now home. And it's often an interesting crossroads for a lot of investors to go, when do you actually make the decision to then buy your family home? Because if you want to keep growing your portfolio, your home loan's non-deductible debt versus the investment lending. So take us through, I mean, is it part lifestyle? Is it just a time in your life where you go, hey, look, I want to put down some roots, for example, and I can come back to investing later? Let's just kind of get inside your head a little bit about how that decision was made as well.
Yeah, well, that's a really good case in point. Life changes, and based on life changing is what sort of brought me to this point. When I started Rentvesting in 2015, I spoke to my accountant, and she said that I can only live out of my principal place of residence and rent it out as an investment for a set period of time. So I either had to sell it within that time, so to avoid paying capital gains tax, or move back into it. So what I ended up doing, knowing that this unit, which I bought at 23 and it was great and it's super close to the city and, really suited me in my 20s, doesn't really suit me and my fiance and my puppy now, because, life's changed. There's more of us and the puppy needs grass and room, obviously. So I think it sort of just naturally came about. So that first property, my partner actually helped me renovate, and we renovated it with the idea of selling that so that we could buy this house that we're in now. Yeah, that's been this year. We renovated that and sold that at auction, and that allowed us the funds to be able to purchase out of Sydney, which we've been talking about for a few years, which is for us a bit of it's how we can get a large house to live in with a large yard space, but without paying Sydney prices, which I think a lot of people in our age group are encountering.
It's definitely that transition, whether it's north, south, or out, say, to the west, to the mountains, for example. A lot of Sydney sea change or tree change has gone, well, look, I can have the best of both worlds. I can still kind of have my foot in my Sydney role, for example, still get paid a Sydney wage, but then be a little bit, call it semi-regional, and have a lifestyle and also get a larger home as well, isn't it?
Yeah, definitely. Yeah. And I have to admit, it's pretty good, because I know that it's a mortgage that we can afford, and also we're less than a kilometre from the water, which we would never, ever have been able to afford in Sydney. But we also would never have been able to afford this if I hadn't bought that first unit.
And it's funny how we always say you can connect the dots looking backwards, going, that property then helped me buy the second, then helped me buy the third, and now it's helped me buy my family home. But you only know that looking backwards and in hindsight, and obviously making good quality decisions about the right property as well, isn't it?
Yeah, that's right. And getting the right advice and really looking into it with everything that you can, because it is a big decision. And at the end of the day, it's a big asset, but it's also a huge liability. So you've got to really cover yourself as well and make sure that the decisions that you're making aren't going to basically turn bad later on. You want your investments to work for you in a positive way and continue to work positively.
Spot on. Excellent. Like any investor, there's a roller coaster that comes with it, right? Whether it's something that's unforeseen that comes up from expense perspective. Have you had any, I won't say nightmare because they're not nightmare stories, but have you had any hiccups on the way in your journey?
Oh yeah, most definitely. There's particularly when you rent out properties, there's always going to be something that happens. So in 2017, my first unit, the hot water service exploded inside the unit and completely saturated all of the carpet. So we're talking bedrooms, living room, hallway, kitchen floor was underwater. Wow. Like it just decimated pretty much all of the flooring in the unit. And it was the middle of June, and obviously because everything got completely saturated, all the carpets had to be ripped up. But then the insurance company, insurance companies don't really work fast.
So it's the middle of winter.
It's the middle of winter, and the insurance company's taking their sweet time to get around to putting the carpet in, and the poor tenants decided to stay.
Oh, wow.
They stayed with concrete floors in the middle of winter. So it's, there's a lot of, and that was a lot of talking to insurance companies and, having insurance in the first place. 100% always recommend that you do that. But also having a good property manager, because you've got to talk to them so that they can liaise with the tenants. And then talking to strata, because it impacted different areas of strata, like in the common areas. So Yeah, things like that. I guess it's really important that you have a good team supporting you. The same as when you're going into investing. You've got to have a great team. You've got to have great mortgage brokers. You've got to have people with the experience who know what they're doing. Because when you do come across these challenges, you can't do it yourself. You don't have the expertise or the knowledge.
Spot on. I think a lot of people come into it, and I'll have a chat with a number of new clients going, what happens if something goes wrong? And I'm like, something will absolutely go wrong. It's, again, how we handle it, but also having the right protection in place. Like, insurance is there for a reason. When things go belly up, hot water, the amount of times I hear hot water systems failing or in this situation exploding, it's so common. And that's what insurance is there for. And so you don't sweat the relatively small stuff, because that's what insurance is there for. And then a good quality property manager knows your rights, knows the tenant's rights, and knows how to manage trades coming in and out, what scope of work needs to be done as well, isn't it?
Yeah, 100%.
Yeah. Any other hiccups that you've had? Or, I mean, finance has been one, but yeah, keep going.
Finance was probably the hardest one that caused me the most amount of stress. And I couldn't have done it without you and your team. But it was one of those situations where it was completely out of my control. So I was completely reliant on you and the team of people who were working behind the scenes and liaising with the bank and trying different options. So you've got to really have the right people who know what they're doing at your disposal. But apart from that, I mean, minor things, there's always going to be issues with the tenants, something will get broken or something needs to be maintained. And then, I've had tenants that, were going through a personal trauma as well, and they were getting family members to deal with things and getting quite irate. And in that instance, everything is fed to me through the property manager. So that's, again, when you need someone who's experienced and knows what they're doing. But then also I've encountered property managers who are pretty crap and aren't communicative. So, yeah, you get a bit of everything with investing. It's not all smooth sailing all the time.
Yeah. We hear all the good stories about how much values have gone up or how much extra cash flow. But, yeah, these are the realities. And I often say the property manager is one of the unsung heroes in the team, because you don't realise when or how important a property manager is until things go wrong.
That's exactly right.
That's the true litmus test on how actually knowledgeable they are, how personal they are, because they're our middle person between us, the tenant, and our asset as well, isn't it?
That's exactly right. And the way that I've learnt, because I didn't really know going into it what property managers did, the way I've learnt to tell what a good property manager is someone who is going to be straight up, very communicative, and as soon as there's an issue, they call you on the phone and follow it up with an email. I've experienced, found issues that the property manager has emailed me about a week after they've happened.
Yeah.
It's just not good enough.
Well said. And yeah, we get to see it all the time from a personal perspective, but also seeing numerous clients. The property manager is one relationship where they're there to protect your interests, but also keep the tenants happy as well, because a happy tenant means less turnover. Less turnover means, consistency, rental income, and not having periods of vacancy as well. So that's why, to anyone listening, if anyone's ever considered DIY managing a property, I'd certainly discourage that as a thought process as well, because property managers are worth their weight in gold. Yeah, I guess from looking back on your journey and then looking forward, ideally, to what you want to build out of your portfolio, if you had to kind of summarize your journey or give your insights, your pass some knowledge on, what would you say to someone that's considering investing in property or considering growing their portfolio like you have?
Look, that's a big question. I think the first thing I'd say is do it, and do it now, because the longer you let it wait, the more it costs in upfront. So working in the arts industry, I work with a lot of creatives and people who do a lot of contract work, which is great. And we've got lots of creative freedom. However, the banks don't look so favorably on that. So if you do, and I've experienced that myself, you have to prove with so many different methods of payment that you can sustain the loan, but my friends have been talking, oh, yeah, I should invest. But the longer you leave it, the harder it is. So if you can just get your foot in the door, that's the best thing to do, because it's a great start. And probably the second thing I'd say is have a plan. So think about where you want to be in 5 years' time. You might want to start small, or you might want to have, like I did, an apartment where you can rent out the other room. And then with the aim of, buying an apartment of your own in a different location, maybe down the track. And probably the third thing to conclude all of the good advice, hopefully good advice.
No, it definitely is. Yeah.
Would be to have a good team who knows what they're doing. So go to people who can give you the best advice, people who have invested themselves, because they're the ones who have the knowledge and the power and can guide you in the right direction. Because when you're starting off, you don't necessarily have all the information, and you need those people backing you, particularly like when we experienced, Aaron, when times get really tough. There was nothing, absolutely zero, that I could have done. If I hadn't had you and the team working behind you, I wouldn't have got that property that's going so amazingly well now.
Thanks, Leah. And that's what it is. I think you mentioned it's teamwork, right? So if you're a client, for example, it's about being organized, being responsive. It's about then choosing the right team to come on the journey with you. And like you're saying, people that are maybe 2 or 3 steps ahead of you, that have been there, done that, they can have those blind spots on to go, hey, if this happens, then this is what you need to do, for example. And having, I guess, skin in the game is also super, super important that they're investors themselves, isn't it?
Yeah, totally. Yeah. And I mean, it is hard, but taking that first step and just getting in there, you won't regret it.
Beautiful. Lea, I want to say thank you very much. I really appreciate your transparency and your openness as well. I know it's a lot to come out and be open about your portfolio, but it's been such a pleasure to watch you grow, build, mature as well in your portfolio plans, and also your personal plans as well. So I want to say thank you very much for your time. Thank you for sharing with us as well.
You're welcome. My pleasure. Thanks. Thank you for having me.
Thank you very much. That wraps up another episode of the Australian Property Investment Podcast. If you found this helpful, leave us a review, or if you want to get in touch and ask a couple of questions about building your own portfolio, we'd love to help as well. So I've been your host, Aaron Christie David, and we'll chat to you soon. Thanks very much.